Today, I want to talk about the fact that yes, our life is the most valuable asset that we have. In fact, I can actually say this: your life is your most valuable asset, and the ability to work is your most valuable asset. Your most valuable asset is your life and your ability to earn an income. It is a human being that is alive that can actually live in a house or drive a brand new car. So I hope you are able to value that life. Okay, you're able to value that life. The topic that I want to talk about today is not an interesting topic. It is just that the truth has to be told. We have to talk about the fact. How can you understand that life insurance is important to you and also important to your family? Okay, so my name is Yemisi, and today I want to talk about the benefit of having a life insurance policy if you live in Canada. So, if you are looking to buy a mortgage, right? Most likely, you're going to set up what is called mortgage life insurance or what is called home insurance, as the case may be, maybe condo insurance if you intend to buy a condo, right? So, when you have your personal life insurance policy, you can use it as your mortgage life insurance. What that means is your personal life insurance offers the same value as your mortgage life insurance. So when I use the word mortgage life insurance, a lot of people get excited. I am not saying your personal life insurance is going to pay for that mortgage. No. Mortgage life insurance pays for your outstanding mortgage balance. God forbid you were to pass away, you gain admission to heaven during the amortization period, and you are still owing the lender a certain amount of money. So what happens is, because you have a personal life insurance, you can use it as your mortgage life insurance. They do the same thing. Okay, the benefit on your personal life insurance goes to your family, and your family, if they want to keep the house because the house has an outstanding mortgage balance, they can actually go ahead and use that tax-free money that they got from your personal life insurance. They can use it to pay off the mortgage. So what happens is, when you decide to have your mortgage life insurance, it is a good thing. That policy makes sure that during the amortization period, which could be 20, 30 years, 25 years, as the case may be, if life was to happen and you gain admission to heaven and you are still owing the lender, you owe the lender a certain amount of money, mortgage life insurance is the policy that makes sure that whatever you owe on that mortgage is paid to the lender, so your family do not need to struggle about paying the mortgage. That also means on your mortgage life insurance, the benefit goes to the lender. Your family does not receive $1, they don't receive anything. It also means if you have your personal life insurance, the benefit goes to your family. So the question is, who would you like to protect? Are you looking to set up a policy where you pay for the policy, the lender is also the beneficiary, or you want to pay for your personal life insurance and guess what? Your family is the beneficiary. I hope this is very self-explanatory enough. So you need to understand the reason why you need a personal life insurance in Canada. Your life is more valuable than a car. I hope we are on the same state of thought, right? Your life is more valuable than a car, and your life is more valuable than a house. So if you have car insurance, you have, what is it called? You have car insurance, you have home insurance, condo insurance. Then I also believe that our life is more valuable than a car. So setting up a life insurance policy is not out of place. So I get some questions, very funny questions sometimes, and the questions are related to, I am single, life insurance is not my priority. So I'm going to answer that question. If you are single, that is even the best time to get your life insurance policy. Why? You are young, you are healthy. And if you can afford it, why not? So when we are young, we are healthy, that is the best time to get a life insurance policy. Okay. Another way that I like to explain that is, life insurance is not about marital status. Life insurance is not about marital status. Life insurance is not about religion. I'm going to explain the first statement. See, when you are single is the best time to set up your life insurance, especially if you can afford it. And guess what? Because you decided to set up your life insurance when you are young, you are single, you secure your insurability. That is the ability to even get life insurance. So life insurance is not even offered to everybody. Some people, because of their health challenges, they cannot get standard life insurance. They have to pay for guarantee issue life insurance, which is very expensive, right? So when you're young, you're healthy, you can afford, that's the best time. In other words, the best time to buy a property in Canada is when the mortgage rates are low, right? So that means you want to understand the best time to get life insurance. You want to get life insurance when the cost is actually affordable. So the cost of your life insurance is very affordable when you are young, you are healthy, right? That is the best time to set up your life insurance policy. Okay, so I'm going to answer the second objection that I get. The second objection is my religion does not allow me to set up life insurance. So let me explain this. There's a difference between religion and protecting your family. Protecting your family means, God forbid, if life happens today and you gain admission to heaven, every religion supports the fact that you should love and care for your family. Every religion on planet Earth. So life insurance replaces your income. God forbid you were to pass away. That is what life insurance does. And I don't think any religion is against the fact that you should feed your family. There is no religion that says you should not love. You should love your family. So in other words, if you love your family and you know the bitter truth is if we were to pass away today, how will our family actually be able to pay for the rent or the mortgage? How will they be able to do all of that? Especially if you love your family, you love your spouse, you love your kids. So life insurance, the first thing that a life insurance policy will do for you is that it is going to replace your income. It is going to replace your income. If I were to pass away today and my family receives 1.5 million, I don't think they can actually struggle financially anymore. So that is what life insurance does, right? It replaces your income. Now, another objection that I get is the fact that, oh, it's very, very expensive. In fact, some people pay as much as $400, $500 for car insurance. But when it comes to their life, the life that is driving the car, they say life insurance is expensive. Please, I want us to actually have this conversation. Your life is more valuable than that car. In fact, the car is replaceable, but your life is not replaceable to your family. I I always find it very, 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 very important to mention this fact. I lost my father when I was 17 years old. 17. As a teenager, I know the fact, I know it for sure that nobody lives forever. Now that I'm not even a teenager anymore and I'm speaking to you and you're listening to this, you know for sure nobody lives forever. And the annoying part is we don't know the day and time that is going to be the last one for each and every one of us. And that is why life insurance is a priority. Enoch, I'm coming. Mommy. Yes, please. Okay, give me 5 minutes. I'm coming. So, life insurance is very, very important for you to understand that there is just 1 second between life and death. Like I was saying, I personally I lost my dad when I was 17 years old, and I can tell you for sure, right? Nobody lives forever. You might know the amount of money you have in the bank account, you might know the amount of money that you have in your investment portfolios, but nobody knows the number of days or the number of hours we have till we say we gain admission to heaven or we pass away. Nobody knows. And that is why life insurance is your priority. So sometimes when I'm having discussion with clients that say, oh, I want to invest $20,000, I want to invest $50,000, I want to invest $5,000. But yeah, see what is your advice? And I walk them through tax-free investment, tax-deferred investment, tax-deductible investment, and they make their choice. And I want to set up their policy. I always take them back to this very fundamental question. It is a fundamental question. It is also an annoying question at the same time. The question is annoying, and I ask them, I say, if you were to pass away today, you want to set up investment, you want to invest 5,000, 20,000. But if you were to pass away today, If you were to pass away today, what happens to your family? Are you sure your family can actually pay the rent? Can they pay the mortgage? And the question is very annoying and very, very important. And my client will say, why am I asking that question? And I'll let them know. See, one of the most important things you should do for your family is setting up your life insurance policy. So we all like to buy Christmas gifts for our family to show love to our, yes, one of the best Christmas gifts you will set you will give to your family, one of the best Christmas gifts they are going to give to your family is your life insurance policy. And the wonderful part is that it is actually paid to your beneficiaries tax free. Whoever you name on the policy receive that money tax free. And one of the one of the most important thing about investing in Canada is you want the tax free option. Once you have maxed out the tax free option, then you can go ahead and set up taxable investment, right? But we are taxed everywhere. We have to pay taxes. You pay taxes, I pay taxes. We earn an income, we pay taxes. When you receive what you have been taxed, after tax dollars, you go to Walmart, Costco, you still have to pay taxes. When you pay for electricity, Wi-Fi, you have to pay taxes. We all have to pay taxes. So I don't think it's a bad idea that you set up your life insurance because the benefit actually goes to your family tax free. What that means is if you take the bold step to set up your life insurance and you do 500,000 life insurance or 1 million, your family receives the benefit tax free. So I wanted to say this statement. A lot of sectors are regulated. I can even say all sectors in Canada are highly regulated. But you see, we have three major sectors that are highly super regulated. Three major sectors are highly super, I don't know how I should qualify it. Three major sectors are highly regulated in Canada: the food industry, the healthcare industry, and then the finance sector. Those three sectors, the type of regulation that is in that sector is really interesting. So when it comes to finances, I want you to know that insurance sector is highly regulated. They will not exist if they are not regulated by the federal government of Canada. They don't exist. But the reason why insurance company would exist is because they are highly regulated. Like I said, there are so many sectors that are highly regulated in Canada, all sectors, okay? But there are three major sectors that are super, super regulated: the food sector, the finance sector, food sector, FFH, that's the acronym. Food sector is highly regulated, finance sector is highly regulated, and health sector is super highly regulated. So when we are talking about insurance company, one thing you should know is that the insurance sector is highly super regulated. Now, for you to understand the fact that when you want to set up your insurance, I mean any type of insurance, my job is I'm a licensed financial security advisor, and my job is just to advise you. Okay, when it comes to insurance, the best place to get your insurance in Canada is with an insurance company. Why? They specialize in insurance, and that is why they are called insurance companies. Yes, that is the reason why. Okay, they specialize in insurance, and that is why they are called insurance companies. So that is the best place to get your insurance. I mean anything called insurance. Now, you are actually protected so far you own a policy with a registered life insurance company. You are protected from day one. You are protected from day one, right? And you are protected by the company called Asiris. A for Apple, S for Samuel, S for Samuel, U for Umbrella, R for Rabbit, I for India, S for Samuel. You are automatically protected by us. You don't need any extra application for protection. Your policy is protected by a series from day one. Okay, now I want to establish this fact. I said we want to talk about what can you use your life insurance for if you live in Canada. Number one is I said you can use your life insurance policy for your mortgage life insurance, and I explained this. I said your mortgage life insurance does not pay for your mortgage when you are alive. It pays for that mortgage, excuse me, if you were to pass away during that amortization period and you still owe the lender. So mortgage life insurance makes sure that the lender receives what you owe them. That is it. So the lender is going to protect themselves. Look at you, if you borrow me $500,000, you want to make sure that I pay you back. So that is what the lender does. The lender is going to entice you to set up mortgage life insurance because they know that nobody lives forever. So if you were to pass away, they will get their money through the mortgage life insurance. So mortgage life insurance means you insure your life during the amortization period, and then if life happens, you gain admission to heaven, the mortgage lender gets their own money. Your family does not get any, they get $0. But if you have your personal life insurance, your personal life insurance does the same thing as a mortgage life insurance. The difference is with your personal life insurance, the benefit goes to your family. On the mortgage life insurance, the benefit goes to your lender. So you are the one to decide if you want to actually protect the lender or you want to protect your family. Yes, I'm on my way. Okay. So another thing you can get from your mortgage, from your personal life insurance, is the fact that it offers you it offers you compassionate benefit between 10,000 to 250,000, depending on the type of policy that you set up for yourself. Okay, compassionate benefit simply means if, God forbid, you were diagnosed at 80, age 75 to have a terminal illness, people get healed miraculously by God, but during that period, you still need money. So, if it was a terminal illness diagnosis and a medical doctor sets that diagnosis or establishes this fact, you only need to send in your doctor's report to receive that compassionate benefit, which I said ranges from 10,000 to $250,000, depending on the coverage that you have on your life insurance policy. So, I mentioned the second way to use your personal life insurance. There are some life insurance that offer living benefit. Living benefit is also related to health, health that related to disabilities caused by a sickness or an injury. If that was the case, you also need to submit the doctor's report to enjoy the living benefit. So sometimes you're going to hear living benefit life insurance. It simply means in Canada you can use your life insurance when you are alive. Now, the insurance sector is so important in Canada. That is why IRCC in February 2025, they added insurance agents and brokers to the Express Entry PR pathway. Insurance agents and brokers was listed under the STEM category. STEM category. So for you to realize that the insurance sector is actually important in Canada. Now, if you have a mortgage life insurance, so if you have your personal life insurance and you decide to do permanent life insurance, those type of life insurance, if you fund it properly and you wait for the investment to accumulate, you are able to enjoy the investment portion, which is actually called cash value when you are alive. But guess what? You can't plant a seed today and harvest tomorrow. What you plant into a whole life policy or universal life determines when you harvest. What coverage do you have? If you have a lot of coverage, it means the amount of money that goes to your investment is very low. That is what happens in a permanent life insurance policy, right? So a permanent life insurance policy like whole life or universal life is good because if you're able to set it up now, you only pay for a certain period of time and you don't pay anymore if it is set up properly by an experienced advisor. And that is why you need to use my services. Now, another important thing that you need to understand is, you see, I mentioned the fact that we all like to buy Christmas gifts. Christmas gift, Christmas gift. There's some Christmas gift that is not going to be valuable in the next 5 years. Like I said, the best Christmas gift that your family is going to ever receive is your life insurance policy. Like I mentioned, nobody lives forever, and your policy can actually support your family tax free. Now, another perspective is this fact that life insurance is based on your budget. If you say your $50 is your budget, then you have to get what $50 can offer you. If your budget is $100, then you can get what $100 budget can offer. If your budget is $1,000 per month, then so be it. You are able to get what your budget can offer. And if you're someone you can put $5,000 into your life insurance every single month, it is one of the ways that you can actually set up cash value policy and make sure that you are able to use the cash value from your life insurance policy when you are alive. So let me know if you have questions and I'm able to guide you. Let me know if you have questions. So yes, if you live in Canada, you are able to use your life insurance when you are alive, and the budget that you have will determine the type of life insurance that you can set up. So there are different school of thought. I would say two major school of thought when it comes to life insurance. Some will say buy term insurance and invest the difference. Another school of thought will say buy permanent in life insurance and invest. See, you have to take time to understand the perspectives that these advisors project into your life. Because if you were to take the wrong decision, it is a painful one that you are going to discover in the next 20 years. And that's going to be terrible pain. It's going to be a painful experience and you don't want that. So the way you watch a movie for 2 hours and you're fascinated about that, that is the same way you are supposed to listen to different types of life insurance. Get fascinated about the different perspective because you can actually use such life insurance policy. Even if you decide to have a term insurance, it is able to support you financially if there's a terminal illness and you can get compassionate benefit from your policy. But most of the time, a term insurance is like renting. If you rent, you have to pay your bills every single month. The month you don't pay your term insurance, even if you've been paying your term insurance for the last 20 years and you miss just 1 month for whatever happened, whether your bank account was frozen, whatever, you traveled, you lost your card, you froze your account, and for if your premium on your term insurance is due today, there is only 30 days grace. If you don't pay the term insurance, it expires. That is no policy. The policy has expired. The policy has been terminated. So that is term insurance. But if you want to buy a property, you know you can decide not to pay for the property forever. You can choose amortization period of 20 years, 10 years, 30 years, and you are able to complete the payment of that house. So permanent life insurance is like that. You are 30 years old, you set up your permanent life insurance, you pay from age 30 to age 50. And at age 50, once the policy is set up properly, you are not paying anything again for that permanent life insurance because you have fully overfunded that policy during that 20 years. And then the policy that you did set up at age 30, it is still valid till whenever death happens. That is why it is called a permanent policy. It depends on how the permanent policy is structured. That will determine how your investment called the cash value is going to accumulate over time. It depends. There's a lot of factors. So it's just like saying you want to buy a property. Where you buy the property will determine how fast equity is going to build on the house. So you can buy house anywhere. You can buy house based on your budget. But the equity on that house, how will it increase over the years, right? Where you buy your mortgage, will the location that where you have your house, the location determines the equity. How fast will the equity on that mortgage build? So it's also the same perspective. When you have a personal life insurance that is a permanent one that has cash value, the period of time, the period that it's going to take for that personal life insurance, permanent life insurance to accumulate cash value that is accessible to you to use without surrender charge will depend on how much you put into the policy, will depend on the coverage amount you have on the policy. So there are so many factors that need to be considered and you need to work with a professional that can explain term insurance without bias, whole life without bias, universal life without bias, and then you make an informed decision. Okay, I hope you have value for your time today. Thank you so much. Have a wonderful time. Please reach out if you have questions. Thank you for having me.